Hello everyone, this is Dave, aka DREBG, senior member over at informedtrades.com. If you haven't had the chance to get over to Informed Trades, I welcome you to do so. There's tons of free information, great traders, and great advice, and it's a great place to learn and also share your own ideas and maybe even start your own blog. What we're looking at today is some divergence trade on the dollar CAD pair. The screen you're looking at is the 30-minute chart, and I'm going to show you exactly what setups happened where I decided to take my trades and when I wanted to get out and why they worked out so well. So let's get into it. Now, the first thing you'll see on this page is some very basic information. I should point out are the 200 EMA that I have up here. This is the 20 EMA that I have here, and this is the 8 EMA that I have here. The pink line that you see was a trade that I actually took last week where I entered short here at the 200 EMA and I exited down here for a profit. This isn't what I'm going to talk about today, but I'm leaving that line up there just for reference because after I got out of this trade, I was kind of looking to see where I might be able to get in again, but I wanted to see if price action would consolidate, which as you can see here, it started to do. Now, as most of you know, I'm a big fan of plain charts, clean charts, but I do use indicators, and I use them to help me identify where I might want to take a trade based on a trading range especially. I've added a CCI, and you'll see this is a 10-period CCI that will allow us to get a little more information about where we think price action might be going. In this case, after my profit target was hit here, I had expected things to go into a range. So right here is where I decided to try and identify a range. And that range is now going to help us to determine where we think price action is going to go and if it's going to do something when it reaches both ends of that range. CCI is great, but in and of itself, it doesn't do a whole heck of a lot because it can give a lot of false signals. For those of you who've used CCI in the past, you know the two primary levels that the indicator was originally designed for were 100 and minus 100. And there's a zero line in here that I don't typically use because that's not really where my focus is. I'm looking for this to pass below the 100 level, i.e. overbought, or pass back up through the negative 100 level, which is oversold. So with that, relative to some level of support and resistance, in this case the channel, we're able to determine a high probability, good risk to reward ratio trade. And here's how it broke out. If there's some divergence between price action and what the indicator is doing, and it's at a support or resistance level, in this case the upper or lower end of the range, there's a good chance that there might be a trade. This is what it looks like. As you can see, price is diverging, where it's going down here and it's going up here. Likewise, it's moving upwards here and it's moving downwards here. Upwards here and downwards here. It's very important to get the time frames correctly. You want these peaks to line up with wherever price action is. Now that we've identified these areas, now what? Well, my rule of thumb, especially when using CCI, is to try and enter not only where it's occurred at the extremes, but also where it has re-entered the general area of the CCI. And usually when it crosses over, I enter on the following bar. So this is what it would look like. You can see here we have this divergence, we have this candle where divergence ended, and then we entered on the next candle where the indicator has gone below the extreme. And we just simply enter for a range of roughly the bottom of whatever the channel might be. In this case, it's right around 20 pips. And we risk, in this case, 1 to 2 as far as risk to reward. And I also like the fact that we're kind of in an overall downtrend, and this is playing with the trend. Once this happened, I entered here, we got out here, that was a profitable trade for plus 20. And I was done, because I don't know what it's going to do when it reaches the range bottom. If it's going to break through, come back, who knows? The point is, once I saw it break the bottom and retest, I then saw that there was more divergence. And I waited, and the key here is really to wait because each one of these is 30 minutes and it can be really testing sometimes when you want to scalp and make a trade. And I waited until we had some crossover, in this case from negative territory as far as oversold on the CCI, and I entered on the following candle, which would be here. And I entered long for 20 pips. I didn't shoot for the top of the range because I didn't know if it would have enough to get there. I just shot for somewhere around these highs back here, which again happened to be about another 20 pips. I banked those, and then I sat back and I waited. Well, price action continued upwards and touched the top of the range, but I also then identified that we're heavily overbought again. So I bided my time and I waited, and once we've identified this area of divergence, especially when divergence is completely located in the extremes, I entered when price action dropped back below 100 on the next candle. This price dropped back down and we went short for another 20 pips. So when you put it all together, this is what it looked like. This is the old trade that we had made before that had nothing to do with what we're talking about today, but it did set up the range that we're talking about today. So once it hit here, I was looking for another area where I might be able to get a short after a period of consolidation. Just so happened I saw some divergence here. And I waited and said, well, this divergence is happening right at the top of the range. I think we got a pretty good shot, and it's in the direction of the overall trend. This is a great trade. Risk 10 pips, gain 20 pips. Here's the trade, and I'm out at the bottom of the range. Then I wait. It breaks the range. It could have kept on going. Who knows? It could have broken right back up through the top of the range. I didn't know. The point is, I waited. There happened to be some additional divergence in oversold territory, which is great. It's a perfect place for divergence to occur. But then you have to wait some more to see if it crosses back up through negative 100. In this case it did, and I subsequently entered right on this yellow dot where the arrow is. The pink line shows my 20 pips that I took. And again, you can see I did not shoot for the top of the range, so I didn't know it was going to make it. I shot for these candles here, which is a kind of a small supply level. And my 20 pips got hit, and I got out with another 20 pips. When I came back to the charts, that I saw another shot of divergence around the top of the range, where you have this confluence of price action and divergence at support or resistance area. So we entered here again after it broke 100. The following candle entered short here. Where did we go? Target was the bottom of the range. It got there. Could I have moved to break even and let it keep riding? Yeah, sure. But at that point, I had banked a good, I think this is about 50 pips over here. Another 20, another 20, another 20. And I just wanted out. We had a nice range here of about 30 pips, give or take. And I just wanted to get the bulk of it on the move. So with that, I hope you got a lot out of it. If you have any questions, you can feel free to email me at drebg@yahoo.com or visit my blog over at informedtrades.com. Happy trading.